Hey guys, Akil Stokes here. Welcome back to another episode of the Trading Edge video. We're going to hop right into things today, as I know you're pretty occupied watching the Open Championship final round. Today we're going to talk a little bit about what has happened this past week, what I think will happen in the weeks to come, and of course we're going to look at a few trading opportunities on the euro dollar, the euro yen, and on Comcast. Yeah, we're throwing a stock in there. So let's start off with the euro dollar, and it's been an interesting week. We've been kind of playing this kind of arms race as far as interest rate goes, where one domino is affecting another domino, which is affecting another domino, meaning each central bank is kind of waiting to see what others are doing before they make their decision. And it's making things pretty awkward, right? Canada came out this past week and surprised us with a 100 basis point rate hike, which expectation was 75, so it was a more aggressive than the expectations. Now the question is, what is the ECB going to do this Wednesday, I believe, Wednesday or Thursday, to have their monetary policy statement? And then even bigger than that, what is the US going to do coming up next week? And I got a good question from a little bit of a panicking trader this week asking, Akil, why did the dollar sell off this past Friday? And I think it's very important that we don't overact to things. You can see in front of your chart here that we did have a bullish day on the euro dollar, which means, dollar weakness, euro strength. And remember that a sell-off isn't necessarily a negative thing. It doesn't necessarily mean the market is losing faith in whatever the asset is. It can, right? I know right now with the euro dollar, kind of the big thing is, we originally thought we were going to be more aggressive, and Canada went, a full percentage. So we're going to go a full percentage as well. Then some retail news came out on Friday, which maybe kind of pushed it back a little bit, like, maybe we'll stick to, 75. A few Fed members came out and said the same thing. So there is a little worry and concern, but there's also a lot of profit taking being had, right? If you've been following this YouTube channel or following me with the live streams for the last month or so, right? We've been calling short on the dollar ever since we broke 104s, right? So I know sometimes these videos seem boring and repetitive and they're not exciting. We're not giving you new trading strategy each and every day. But the reality of trading is, right, you find something that works, you find a good opportunity, and you milk that good opportunity until it's gone. And we said that about the euro dollar from 104. We said we would go down to 102s. We said we would go down to $1. And I still think we can go down to 96. But also what's happening here is a lot of profit taking, right? We're going into the weekend. A lot of people made a lot of money shorting the euro dollar. It's time to take some profits, cash out, and reload for the next move, no matter what that may be. And I think the market does have to rethink that a little bit, depending on kind of what happens in the next few days. But bigger picture, as I mentioned, I'm still looking for 96s, which is down here, 96 cent. I'm not going to zoom out to the weekly, but you can go out there and you'll see there's a nice kind of structure swap ice zone there. So a previous level where previous structure resistance, something that looks like this. Actually, I should draw it at the line, right? Previous structure resistance, which held, was eventually broken and turned to support, right? These are my favorite structure levels to trade. We have one right down there about 96 flat. So that's where I think the price action is going to go next. Now, the question is, how are we going to get there? And markets do give relief, right? We've seen relief at every point of this move. We've seen a break of structure here. You can see our VS1 broken, and then we saw a little bit of relief, right? We just saw a more recent level of structure broken here at 103.50s, and it would not surprise me if we saw some relief as well. The question is, where is that relief going to come to? Now, in an ideal situation, we would return to our previous level of structure support, which we would now expect to act as resistance. That's that green box, our VS1 level right here. Will we get there in time? Because I think this move does have to happen within the next few weeks. And that's, it's a 300, 400 pip move. We can. We've seen it before, right? We've seen a 200 pip, 300 pip move right here happen in basically a week. So it could happen. But you should also be aware of lower areas as well if you're looking for short. So we'll kind of do like a bigger picture, smaller picture thing. Bigger picture, I think a move back up to our previous structure level right here is an ideal place to start looking for your next sells, reloading on those sells. From a smaller perspective, maybe we go down to a 4-hour time frame And maybe you aim for this level right here around 102s. I'm okay being patient. Again, this is a bigger picture outlook for me. So looking for that 104s is ideal for me. And of course, the opportunity can change no matter what we get during the week. We could put in a low and tight flag. We could put in a descending triangle. We could put in a reversal pattern that eliminates the idea in its entirety. But for right now, I still think we can go to 96s. Be aware of a potential retracement, a little bit of relief back up to 104s. And we've got the news events that would sneak that in there coming up. And then an eventual move down to 96, as I still think the dollar is the strongest currency pair out of everything else it's going against in reality, but especially the euro, Next up, we're going to go over to the euro yen. I'm going to start here on the daily chart. This is going to be another follow-up. Again, one of these ideas we've looked at for a while now, but we had a nice hold here. This was our initial look when we started looking for longs. We had a nice hold here. Down on the lower time frame, we put in a little bit of consolidation and we broke that channel to the upside. So the next question is if we're going to continue to the upside, where are we likely to continue to? I don't necessarily think we're going to continue all the way up to retest our double top here, or our retest the structure, I should say. But I do think we can come to this level right here on the euro yen, right? So this zone between 140.60s and about 142.49s. Now, as we go down to a lower time frame, the 4-hour chart, we can kind of shrink down that zone, right? And kind of pinpoint our area. And I'll do that right to here. But I certainly think we can expect to move back up to this level again, about 142s, 141 highs. And we're setting up a pretty nice pattern, right? You can see that this is that consolidation that we talked about, right? Price action tested our lower level of structure there, our rejection zone on the daily. And we kind of went sideways for a few weeks. And then we finally popped, broke above, close above. And now we're setting up a pretty decent triangle looking pattern, right? We have rising lows right here. We have equal highs, right? A little bit of congestion. I would expect some type of a pop. Again, you know, when we see these breakout patterns, we look at the market as being like a spring, right? It gets closer or closed in, closed in, closed in, closed in. Eventually it has to break out one way or another. And then boom, it breaks out. And it's up to us as technical analysts to kind of decide and predict what direction we're going to break out in. And based on the fact of this specific type of formation, and based off the fact that we just broke and closed above to the high side here of our consolidation area, I think we're going to break to the upside. So I'm looking for an opportunity to trade it from 139.70s up to that 142 or 141 high level here on the euro yen. So lastly, we're going to head over to Comcast, right? A stock, right? You guys know me as a trader, and mainly we talk about trading opportunities on this channel, so short-term opportunities. But I started off as an investor. I got back into investing heavily, really around 2020. And every once in a while, I like to show some of the ideas that I'm looking at. Now, as always, I advise that you do your own research. You make your own decision. I'm just kind of here to put the idea in your head, and then you can kind of go off and make your decision based off that. But what I like with stocks is two things. One, instead of technical analysis being first and foremost, as I am as a trader, in stocks it's the opposite, fundamental analysis, right? I actually have to want to buy or, you know, invest in the company. Technicals are secondary, as I use that to see what the value is, right? Are we at a cheap enough price where it is worthy of my buy? And Comcast is interesting. Comcast has a lot of, well, there's been a lot of negative movement in Comcast, and more negative movement than I think this stock deserves, right? The company is not as weak as it may look on your chart here, crashing down to almost, sorry about that, busy guy, crashing down to almost 2020 lows. But there's some really good things happening with this stock, you know, whether it be kind of the Disney Hulu thing that's coming up, whether it be kind of the surges in the different aspects of his business, whether it being just like, and this is something I personally love with my stocks, or it's a dividend giving stocks, and they've been steadily increasing their dividends, right? The old kind of Warren Buffett technique there. But there are a lot of positives here with Comcast. Again, I recommend that you do your research on that. Another thing is kind of bigger picture. I don't know how you feel about streaming, but we've kind of gone through this era where everyone's gone from cable to the streaming wars, and Comcast does have its own streaming network. But I think bigger picture, we're going to actually head back to the cable standard, as kind of the streaming systems end up costing more than what you were paying for cable originally, and we're kind of come full circle. But that's a longer term idea. Fact of the matter is, we've put in a heck of a retracement here. we're coming down to a previous level of structure. Again, here are the COVID lows. That's just what I call them. Right down here, which as long as we stay above this level, I think this is a good buy. We've got a deep retracement right down to about a 786 it looks like, maybe a little bit further than that. Yep, right on a 786. And we've got some nice hidden divergence happening here from a technical standpoint as well. So if I bring up my RSI, you're going to see that recently price has put in a lower low here on the RSI. However, we have put on higher lows here on our price chart, which is called hidden divergence. It's something that I look for in continuation opportunities and kind of measuring the strength in the market. And by strength, not only just the strength, but the strength in relative to the potential reversal nature of it. So check out Comcast again. Longer term investment. I advise that you do your own research as usual. Of course, got to say that, but also I actually do advise that you do it because you don't just want to pick stocks to pick stocks. You want to pick something that you're actually invested in. But this could be a really sneaky good buy for the long term.